In this video, I'll help you understand the important concept of support and resistance. I'll show you how to identify support and resistance in the market and explain why you should always look for these levels to support your trading decisions. Make sure you stick around until the end of the video, as I'm going to share with you my top 5 rules for buying a stock based on support and resistance. Hi, it's David here from TradePro, and on this channel I share trading techniques to help you understand the market and win more trades. Now, have you ever studied a chart and wondered why the price action of a stock changes direction at certain levels? I know I have. Now, whilst there are many different factors that affect price action, there are certain price levels that seem to have an invisible barrier. Now, these barriers are known as support and resistance. In this video, I'll explain the concept of support and resistance levels using the house metaphor, and I'll show you how to identify natural levels on a chart, and finally, when to use these levels to support your trading decisions. So firstly, it's important to define what we mean by support and resistance. To define support, we can say a support level is a price point where a stock stops falling. Now, in order to fully understand this concept, we need to know why this happens. If we think about simple market economics, we have the well-known concept of supply and demand. Now, applying this concept to the stock market, we know that when there are more sellers than buyers, price trends downwards until either the sellers and buyers are equal in number, resulting in the price action moving sideways, or more buyers enter the market, outnumbering the sellers, resulting in the price decrease slowing and then beginning to rise again. Now, if a stock falls through a significant support level, this is a strong indicator that the price will fall further and can often result in panic selling, resulting in the price falling even further. It's not until the buyers and sellers are equal and agree on the price of a stock that price levels out and a change in price trend is possible. Now, it's important to know that once price action breaks through a resistance level, it then becomes a future support level. Now, following a bullish move, a stock price will often come back to test the previous resistance level, finding support before taking off once more to reach higher prices. Now, to illustrate the concept of support and resistance, let's examine this diagram of a house. Now, you can see we have a ground floor, first floor and second floor, all with their corresponding floors and ceilings. Now, I've overlaid price action of a stock as it moves in time. So we can see, starting from bottom left, price rises before meeting resistance at the ceiling of the ground floor. When price action stops rising and moves sideways, there is equilibrium between the buyers and the sellers. That is to say, they agree on price. Now, sideways price action is often called consolidation. It's only when the buyers, the bulls, overpower the sellers, the bears, does price break through the ceiling and move up into the first floor. Now, as a side note, it is said that stocks move up in stairs and down in elevators. That is to say, rising price action takes time and often moves up for a few weeks before pulling back to take a breather before moving up once again. Conversely, a falling stock can move more quickly, usually driven by fear and panic. So this process repeats as more buyers enter the market and price continues upwards. Now, once there's no more buyers available and sellers begin to take some of their profits, price action will meet resistance and then reverse to the downside. However, price doesn't drop straight down. Similarly to the rise, it falls and meets support at the previous resistance levels. These pauses in the downtrend represent a decline in selling and some ill-informed buyers entering the market. The key takeaway from this diagram is that support and resistance are related. Historical resistance levels often become future support. So knowing this, why do we use these levels to support our trading decisions? Good question. because it's these important price levels help us identify where a stock may stop falling and might find support in a downtrending market. Or conversely, where a stock may stop rising and find resistance in an uptrending market. And thirdly, where a stock may reverse its current trend. Of course, having said all this, there's no guarantee any of this will happen, but understanding the key price levels of a stock will allow you to be ready to make better trading decisions. Now that we understand the concept of support and resistance, let's look at an example together where we can apply some natural levels on a chart. So on your screen now, we have a weekly chart of CSL with price data all the way back to 2016. Now, if we first mark up some significant price peaks and troughs, it'll become more obvious where the significant support and resistance levels might be. Now remember, consider these levels as zones rather than exact price points. Now this first level is around $232 and represents the previous peak back in September 2018. The second level I've marked is at $242. This is where the price paused in September 2019 during an uptrend. And you can see price action came back to test this level on 3 occasions, most recently breaking the level only to reverse shortly after. Another key level is 267, where price has found support on multiple occasions. Next level, 320. This is a price level that has met with buying resistance. And finally, I've marked up the current all-time high of CSL of 343. That was reached in 2020. Now this peak represents a significant level of resistance for future price action. So I hope you can see by looking at this chart, there are certain price zones that you should be aware of. Now these zones show where price action has changed direction in the past, and so price action may repeat this behavior in the future. So that's a brief overview of support and resistance with some practical examples and levels placed on the chart of CSL. Now, if you've learned something so far, please consider hitting that like button so I know you value this type of content. Thanks for your support. Now, at the start of the video, I did tell you I'd share with you my top 5 entry rules for buying a stock based on support and resistance. So here we go. Tip number 1. Firstly, make sure you're trading the right type of stock. Now, if you're a complete beginner, stick to the high liquid stocks inside the top 20 on the ASX or other blue chip stocks. These blue chip stocks are reliable companies that are traded in huge volume every day. Price action is more predictable, volatility is lower, and as you gain more experience, you can look at the top 50, top 100 and so on. Tip number 2. Backtest the stock to check its historical price action. Look for how the price action unfolded previously when it hit major levels of support or resistance. For example, did it go sideways for months? Did it break out quickly? Can you recognize any repeatable behavior at certain price levels? For example, has the stock fallen to a common Gann level of 25, 50 or 100%? Tip number 3. Can you confirm a price pattern on the chart? Now, common patterns include triangles, flags, wedges and rectangles. Patterns help to predict future price action. Now, if you can identify a pattern on the chart, it suggests the stock could be in a consolidation phase. What this means is the stock is range bound, held by strong levels of support and resistance, indicating equilibrium between the buyers and the sellers. Next, tip number 4. When price action breaks out of the pattern to the upside, the buyers have overpowered the sellers and there is a high probability the price will increase. For example, on this monthly chart of Westpac, we can see price consolidated between $20 and $22 before breaking out. Now, a simple rule you can follow is that when the weekly price closes above the resistance level, you would consider buying the stock. And finally, tip number 5. Before buying a stock, consider where is the nearest support level. If your analysis is wrong and price falls away, where is it likely to stop? Conversely, if you're right, and I hope you are, and price increases, where is it likely to stop rising and meet resistance? It's crucial to figure out these levels before you buy to ensure you manage the risk on the trade effectively. It's also important to calculate there is enough upside to make it worth taking the trade in the first place. A common risk-reward strategy is 1 to 4. This means you would allow the stock to drop 10% under your buy price before exiting, and there is at least a 40% upside potential to the next significant resistance level. So those are my top 5 tips for trading using support and resistance. I hope you have found at least one of them useful. If so, which one was it? Please comment below. Finally, if you're new to trading and you're looking for a simple but effective strategy to win more trades, check out my free cheat guide on trading with trend lines. There is a link in the description below. Thanks for watching, and I'll see you on the next video.